Hello and welcome back to Coffee Infused Crypto. Today we're gonna discuss everything you need to know about the Relative Strength Index indicator, or the RSI indicator. And this is gonna be part 1 out of 2. In first part we're gonna discuss everything you need to know about what is an RSI, how to look at it, how to set it up, and what to look for exactly. And in part 2 we're gonna discuss how to trade the divergences of an RSI, because that's the proper way to trade an RSI. Anyways, both sections or both parts will be in the playlist, EDU playlist on the channel for you as a future reference. If you appreciate the educational content, please make sure to subscribe, hit the like button. Let's spread awareness together. Grab your cups of coffee. Let's dive into part 1. So first of all, what is an RSI? Key takeaways. The Relative Strength Index, or the RSI, is a popular momentum oscillator introduced in 1978. So its role is to tell me the momentum of a move, okay? The RSI provides technical traders with signals about bullish and bearish price momentum. So is it a bullish trend or a bearish trend? And the momentum of a trend. And it is often plotted beneath the graph of an asset's price. And here it is, the stock RSI. And we will add this once we know everything about it in a second. An asset is usually considered overbought, and that's what I was talking about, this area, when the RSI is above 70, and oversold when it is below 30. So the upper dotted line is 70, and this is considered to be the overbought territory, and the lower zone is 30, and below it is considered to be a price of an asset is oversold in the certain price or time frame. The RSI line crossing below the overbought line, here for example, or above the oversold line, here for example, is often seen by traders as a signal to buy or sell. Okay, so yeah, again, we will deep dive into this. So this is where people mainly do the mistakes whenever they see, but mainly the trading range of an RSI is between 30 and 70, and whenever we're above or below that, that's an indicator that we're oversold or overbought. But keep in mind that we may still or stay in those areas for longer periods of time. For example, here we crossed it and we stayed for quite some time, right? So if someone sold around here, that would be here on the chart, the price kept on going higher and higher and higher. So yeah, don't worry about all of this. Those are mistakes that happen to people who are not well informed about the RSI, and once we finish, you will have a different point of view about it. So let's continue. The RSI works best in trading ranges rather than trending markets. Why? Because if the market is trending and is heavily trending, it might take a lot of time in overbought or oversold areas. For example, here it's an overbought area from like 10 January all the way to 29 January. Wow, right? So it's not like this is on the daily, so it's not like a minute to minute or an hour to hour, but can be if you go on a lower time frame. But again, let's start from basics. This is a naked chart. This is an RSI. To add it, you go to indicators and you type RSI. You have relative strength indicator. You click that. There you go. Congratulations. You're a professional trader. Go make money. I'm just kidding. So anyways, this is the stock RSI. But looking at this RSI in this form is just as looking as a chart in a line form. Okay, this is very important. No one tells you about this. I don't know why. But in this form, it's just like looking at a chart in line form. Very few information you can take from a line form. So if you go to, I want the full thing, I want the whole candle. So I want to set up the RSI properly. So as we said, we have the 70 up and the 30 down, right? So we'll start by the style. I want, and then after knowing everything here, you can set up in any form you see fit. So I want the line to be white and I want it to be thicker. So that's one. right? And I want the moving average, this one, this yellow one, I personally prefer it out of the chart. And I'd rather have the 50 line, here let me put it in a bulk yellow, and I want it in a line, and I want it in a thick line. So let me say, so this would be how I want my RSI to be, okay, or to look like. I want to see the middle line, and I want to see the oversold, overbought territories in a dotted like line, and I want the middle one to be in a different color just to see the trading range. But that's not all. If you go to inputs, source is close, that's by stock, and I want to change that. Close means it will take only the closing price of a candle and calculate it in the momentum here. But what I want is I want to have all prices of the candle. So I want the OHLC4. What OHLC means, see, now it changed, is open price, high price, low price, close price of a candle divided by 4. And now this RSI is a one-on-one replication of a momentum of this price action. Okay, so this is the proper way to setting up your RSI. Always keep in mind, 50 is a very important line. Anything when the RSI is above 50, it's telling me that the market is in a bullish trend. Anything above 50, I'm expecting the market, if you follow this line, the dotted line here, so I'll put the mouse at the RSI down, but you follow the dotted line here. So this area, the market or the price action has been moving in a higher high, higher low formation, right? Until we lost the 50, and then here we created a lower high. So we were trending up, and at the same time the RSI was over 50, and once we went below, we trended in a lower highs, lower lows. Again, when we hit above 50 again, the market was trending in a higher high, higher low formation, so the trend is higher. Whenever we lost the 50 here, the market was forming a lower low, lower high formation, so the trend was a downtrend. So always remember, above 50, uptrend. Below 50, downtrend. So, and the higher we go, the more powerful the momentum is, and the lower we go, the more powerful the momentum is to the downside. So this is exactly what I am looking in an RSI. I want to know if we're in an uptrend or if we are in a downtrend, and how powerful the momentum to the uptrend or to the downtrend is. And 50 is always my support if I were in an uptrend, and a resistance if I were coming from in a downtrend, trying to break it and reverse to an uptrend. So if you notice, like when we tried to, if you wanted to trade, let me put it back on the chart and remove those. What common mistakes is, I'll do this so that we can have a fair 50-50. Yeah, so what common mistake is when people see this RSI going in overbought territories, like over 70, and then they go like, yeah, it's gonna reverse soon, so I start selling here. And this is one common mistake, because if you sell here, then yeah, it's going in overbought territories. But look at this. Look, all of this. This is like, if you sold here, this is a loss. And this, as we said earlier, stayed from the 10 January all the way to maybe, it's around 5 February. That's around a month in overbought. So keep note that the RSI can stay in overbought or oversold territories for longer periods of time, right? So jumping into a trade like this is going in overbought territories, so I need to sell instantly, is a misconception or a wrong way to look at it. So in another form, it's like I want to see the RSI going in back from overbought territories back into the neutral territories, and then I would want to, ignite or start my sell position, if that is the case, if I want to trade it. So it's the entry to the neutral zone that I am interested in, not the entry as soon as I touch the oversold or overbought. So it's not, it's like, for example, here, look at this. If let's say, God forbid, I saw this going into oversold territory around this area, and I decided, the market's gonna go, gonna reverse, and I went long around this area. Well, that would have sucked for you big time. I mean, the market went down 15-16%, stayed down for quite some time. So that would be a loss. So don't trade the overbought and oversold territory, because that is not meant for trading. It's just meant to give me 3 points at this moment. So I don't trade the RSI when it's in overbought or oversold territory. I'm not interested in that. I'm interested in knowing if we are in an uptrend. Okay, so if we are in an uptrend or a downtrend, so over 50, or a downtrend, right, or below 50. And I'm interested in knowing how powerful the uptrend is by how deeper the oscillator takes me. So this is part one. This is what I want you to look, or how I want you to look at the RSI for now. 50 is my support and resistance. Over it is an uptrend, and the further the RSI goes, the more powerful, and the lower the RSI comes, the more powerful is the trend, either uptrend or a downtrend. So this is step one. This is how you're looking at an RSI. We're not trading anything yet, okay? And in part two, we will start talking about the divergences and what I am exactly looking to trade for in an RSI. So go practice how to set it up, change the colors, go to the close source and change that, and have it set up properly. And see you in part two in a couple of days, where we discuss everything you need to know about the divergences. After both parts are done, you can start appreciating RSI and looking at it in a different aspect. Anyways, guys, that was everything for today. I hope this was educational. If it was, don't forget to hit the subscribe button, like, leave a comment, share it with your friends, the ones that you love the most. And hope your coffee is still warm. See you tomorrow. Adios. Bye-bye.